Good morning, hunters, and welcome back to the Daily Hunt for Multibaggers. It's Friday, May 29th, 2026, and we've got a packed show for you.
That's right, Ethan. Our AI has been sifting through a massive volume of social media chatter and market data from yesterday, May 28th. We saw a really high number of posts flagging quite a few different companies today.
Absolutely, Brooke. The chatter is buzzing with a lot of growth narratives, especially around the AI sector, suggesting a very promising, albeit at times speculative, market sentiment for certain names.
And as always, we're here to cut through that noise with our AI-generated insights, balancing that growth potential with a dose of KPI-driven reality. Let's dive into today's hot leads.
First up, we're talking about Reddit Inc., RDDT. The community is feeling pretty good about this one, with some users finally hitting break-even after years and holding strong for a potential S&P 500 inclusion. Our AI flagged strong insider buying and an impressive 69.1% revenue growth, plus Q1 earnings were best in the biz. We're looking at a serious upgrade here.
Well, Ethan, while the optimism is certainly there, and that S&P 500 inclusion would be a huge catalyst, we can't ignore the PE of nearly 48. That's a high valuation, and its beta is 1.85, indicating significant volatility. It's an interesting play, but definitely for those with a higher risk tolerance. However, given the recent momentum and the insider confidence, I do see the potential for continued upside if those growth numbers hold.
Agreed. For RDDT, our market commentary suggests a buy.
Next, Red Cat Holdings Inc., RCAT. The buzz is all about drones and war season, with strong buy recommendations from some users getting in today. It's a classic speculative play.
And a lot of that is driven by news of potential Pentagon deals and their Blue Ops subsidiary ramping up production. There's a real growth story here in defense tech.
But Ethan, the KPIs scream caution. RCAT is deeply unprofitable, with a net profit margin of negative 1.38% and negative EPS. Plus, its debt-to-equity ratio is a hefty 5.77. While the drone narrative is compelling, the financial health isn't there yet. Our previous rating was stay away, and those financials haven't fundamentally improved.
Fair point. For RCAT, our market commentary is a stay away. Moving on to Caterpillar Inc., CAT. Users are calling it an AI shovel trade, highlighting its role in powering and building data centers. It's seen as a fundamentally strong, well-run company with direct AI involvement in automated equipment.
I see the narrative, Ethan, and the 22.2% revenue growth is impressive, along with strong profitability. But that PE ratio is over 45, and the price to book is an eye-watering 21.9. That tells me a lot of this AI infrastructure upside is already baked into the price. One user even questioned the efficiency of using generators as a primary power source long-term for data centers. Our last rating was a buy, but given this valuation, it's a downgrade for me.
I hear you, the price is certainly up there, but the story is so strong.
For CAT, we're sticking with a stay away for now, waiting for a better entry.
All right, let's talk about Keel Infrastructure Corp., Keel. This one has serious community optimism. It's pivoting from Bitcoin mining to AI HPC data centers, with major AI lease announcements anticipated. Leopold's backing and a massive 2.2 gigawatt power pipeline have the community very excited.
Ethan, the potential is huge, absolutely. But let's look at today's reality. Negative revenue growth, a net profit margin of negative 1.71%, and an unbelievably high debt-to-equity ratio of 141. The beta is nearly 4, indicating extreme volatility. This is a classic high-risk, high-reward speculative play. It's never been rated before, and it's certainly captivating.
It absolutely is. The narrative around AI power assets is undeniable.
For Keel, our market commentary suggests a speculative gamble. Next, Global Partners LP, GLP. The discussions are all about the disruptive market power of GLP-1 medications, especially in type 2 diabetes and obesity. There's also some significant insider buying, which usually sparks my interest.
Yes, the GLP-1 trend is a massive tailwind for companies involved, and insider confidence is a powerful signal. The market acceptance and expanding applications are huge.
True, but this company, GLP, has a staggering debt-to-equity ratio of 315, and its net profit margin is a razor-thin 0.67%. Despite 15.9% revenue growth, it's not converting sales into meaningful profit. Our previous ratings have mostly been stay away, and those fundamental challenges remain.
A tough one. For GLP, our market commentary is a stay away. Now, Intuitive Machines, Inc., Lunar, the poster that prompted this discussion actually sold their calls, which is a bearish signal from them. However, we've seen recent market excitement around space developments and target hikes.
And while there have been some rallies, the underlying financials are still challenging. We're talking about a net profit margin of negative 32%, negative EPS, and a highly concerning negative price-to-book ratio. Their debt to equity is also high. The market is very speculative here. Despite insider buying over the last 6 months, there were more sales than purchases recently. Our last rating was stay away, and unfortunately, those core financials haven't improved.
Right. For Lunar, our market commentary remains a stay away. Up next, AeroVer Environment, AVAV. This company is riding the drone defense bullwave. They just landed a $20 million Air Force contract, fueling a strong buy consensus among analysts. The community is very bullish.
While that contract is great news, Ethan, we have to look at the numbers. AVAV is currently unprofitable, with negative net profit and operating margins, and its debt-to-equity ratio is still very high at 19.3. That $20 million contract won't single-handedly fix a multi-billion-dollar company's profitability issues overnight. Our last rating was stay away.
I agree it's a high-risk sector, but the growth potential fueled by these geopolitical factors is undeniable. I think this warrants a more optimistic look, given the strong catalysts.
For AVAV, we're suggesting a cautious buy, acknowledging both the significant upside potential and the financial risks. Let's discuss Supermicrocomputer, SMCI. The user post was a psychological play that turned profitable, despite some negative news.
Yeah, but the AI insights show exceptional revenue growth of 122.7%. We've also seen significant insider buying. Plus, their PEG ratio is a healthy 0.91, suggesting it's fairly valued for that kind of growth. They're clearly a major player in this heating AI infrastructure market. Our last rating was stay away, but the numbers are definitely improving to a buy now.
I see the strong revenue and insider confidence, Ethan. My main concern is that high debt-to-equity ratio of 120, and it's a volatile stock. However, that stellar revenue growth and PEG ratio are compelling.
For SMCI, our market commentary suggests a buy. Moving to Dell Technologies, Inc., Dell. This company is seen as critical to AI servers, storage, and enterprise infrastructure. The community believes the market is sleeping on the storage bottleneck. News reports confirm a Q1 earnings beat, a raised outlook due to AI demand, and a massive $9.7 billion Pentagon contract.
All fantastic news, Ethan, and the stock is trading near its 52-week high, reflecting that enthusiasm. However, the price-to-book ratio is a significant negative 83. That indicates negative shareholder equity, which is a structural red flag for long-term fundamental investors, even if a company's profitable. Our last 2 ratings were stay away.
I know, but the AI growth is immense, and they are executing with huge contracts. That kind of revenue growth and market position simply can't be ignored. I think the market is validating the AI pivot. This is an upgrade from stay away.
For Dell, our market commentary suggests a cautious buy, given the strong AI tailwinds against that negative equity.
All right, let's talk Corsair Gaming Inc., CSRS. There's a lot of bullish excitement around their AI pivot, with users reporting massive gains and throwing serious money into calls. The sentiment is very strong.
Ethan, the community enthusiasm is palpable, with talk of 1,000%. And yes, there's been some insider buying. However, the financials are concerning. A PE ratio over 108, a truly alarming debt-to-equity ratio of 28, and a negative revenue growth of 4.1%. This company's current valuation seems detached from its underlying profitability. There are even whispers of it being a pump and dump. Our previous ratings have consistently been stay away or speculative gamble.
But their new AI server strategy, with the Stream Deck and NVIDIA G-Assist, it's a compelling narrative for future growth. That's why the community is so excited.
It is, but the current KPIs reflect significant risk. For CSRS, our market commentary remains a stay away. Finally, Advanced Micro Devices Inc., AMD. Users are in awe of its historical gains, wishing they'd held on. The general sentiment is bullish, with a lot of talk about its AI upside and ability to beat NVIDIA.
Exactly. AMD has demonstrated exceptional growth, particularly in data centers. News is constantly highlighting its AI potential and market opportunities. We're seeing strong revenue growth of nearly 38% and insider buying. It's truly becoming an AI powerhouse. Our last rating was stay away, but the future looks promising.
Ethan, AMD is a strong company, but the PE ratio is currently a staggering 172. It's trading very close to its 52-week high. That means a tremendous amount of future growth is already priced in, leaving very little margin for error. The debt-to-equity ratio is also quite high at 6.0.
You're right, it's a high bar.
For AMD, our market commentary remains a stay away at these valuations.
All right, team, let's recap today's AI-generated insights. Investigators buy Reddit Inc., RDDT, Supermicrocomputer Inc., SMCI, MongoDB Inc., MDB. Investigators cautious buy AeroVironment Inc., AVAV, Dell Technologies Inc., Dell. Investigators speculative gamble Corsair Gaming Inc., CSRS.
And that wraps up another episode of the Daily Hunt for Multibaggers.
Remember, this podcast is for informational and entertainment purposes only. The content is generated by artificial intelligence and does not constitute financial advice.
Listeners should conduct their own research or consult a licensed financial advisor before making investment decisions. We are not responsible for any losses incurred. The market is a wild place, and knowledge is your best asset.
Thanks for tuning in today, everyone.
We'll catch you next time on the Daily Hunt.